Now, Amisha Vora, like I said, of Prabhudas Lilladher joins in with her perspective. Amisha, what are you telling clients to do?
I think as far as the institutional side is concerned, particularly some of the domestics who had built up a bit of a cash or something, they can reshuffle or start nibbling in. But I think from trading perspective, it's not still time to become too adventurous and enter because the correction has been sharp. But I think that, not only the correction is sharp, but the underlying changes also have been pretty dramatic, both globally as well as domestically. And the key worry point continues to be the dollar movement and bond yields. While domestically we know there are 1 or 2 quarters of pain, and the pain could be really aggressive, which disturbs the across the board earnings calculations and so the resultant valuation. And very importantly, for investors, there will be opportunities available for accumulating at the right time, because it doesn't look like that in a hurry markets is going to go away and then this opportunity is going to vanish.
I think that is the key thing. That is the key thing that Amisha said. What you're probably trying to do out here is that for a really long time, the narrative, and Amisha, I want you to come in on this as well. The narrative has been that it's a great market, long-term growth story. The upsides are great, the downsides are probably only 5%. So go out and buy every dip. My question is, and that may well be true, but is that downside here? And even if this is the level, this or around 7,800 is the level, does that get taken out on the upside in a hurry? And just looking at the way the market is falling right now, I think the answer to that is a no. And Amisha, so tell us. I hope the situation on ground improves sooner rather than later. But what's the need of hurrying and putting in the money?
Precisely, we continuously were telling, and I still hold, that this is a market to buy at decline. It is still not a market to buy at sell at rallies, because structurally we are one of the best placed. And with this move also, maybe 2 quarters, maybe 4 quarters, I personally feel that 4 quarters there could be YOY decline in earnings. That is what my rough cut estimate is. I'm sure my research is coming up with the little more details as the things pan out. But important is that it is a buy at decline market, but at the same time, and the macro is fantastic. Whether it is fiscal deficit, CAD, or now even little windfall profit if it comes in terms of spending. But government spending can't really match the fearless spending that people at large do. And because of which I think one part is the economy, which is going to take a little more time in terms of coming back to earnings growth. The second important part, the technical part, is also impacted at this point, which is where the FI monies are there is a shift from emerging markets to developed markets. And that is also undergoing at the same time. So that's how we don't know precisely what is the right level and whether there is going to be a sudden sea change. That both look doubtful at the moment.
True. By the way, Sun Pharma, just keep in mind that halal inspection up about 2.5% in Friday's session, up another % in today's session as well. For Amisha, this serious selling that is happening in the private banking space, what does one do here? Take advantage of it at some lower levels and accumulate some of these, because everything from a Yes Bank, which I can understand, to an HDFC Bank, which has also lost quite a bit of market cap in the last few days.
I think, we should not lose our sight from the fact that this is a temporary phenomena, and come January, I am more worried till December, because there is a Fed rate hike too. And at the same time, what is the commentary of frequency of Fed rate hike? By January, we will have Mr. Trump's few initial, team and what it looks like. But we will also have by then how much is the impact on consumption domestically in the month of December. Some of the numbers would be out. But at the same time, by January, we will also come to know, and that is what I believe, that if we have brought with such a great harassment and difficulty a lot of people into the banking system, what are the soaps government is thinking to keep them inside the banking system, incentivize them? Is there some structures or slabs of income tax which are very, very reasonable for some of these to remain inside? On the top of it, GST rates will also bring a lot of clarity. So I feel 2-3 months of pain is there, and the pain is both global and domestic. So it is not very clear as to the pain has been discounted in the price or there is still more downside possible. But I am repeating that some of these levels, and maybe somewhere till January, we will get good amount of clarity, and Indian macros are one of the best. So markets will not be still something which is to be written off and not get panicked. So even if some of these private banks, you were asking me question, I think their models are intact. They are technologically extremely savvy to take advantage of the new reach and the new class of people who want to access them. They don't need that physical infrastructure, and with all this money which will be deposited, there will be little more accessible people to whom they can go and lend. So I think these are, for medium to long term, very positive moves, and at declines one should continue to remain optimistic and buy.
Right. So do you start buying now itself, Amisha, in order to average it out, or you wait out a bit more because the uncertainty, is a bit, is still a bit all over the place to actually qualify the level which would reflect or price in, all the adjustment news?
So I think domestically, if one would have to see, one would have probably taken a call. But I would think that since these are very, panic kind of situation, then why not to look at the Fed policy and take a slightly medium-term view, if that gives in the meantime a little more dip, or a 25%, starting in large cap. I would still think that the first place to be in would be large cap, and a 25% deployment starting now, and then average it out would be a good strategy. I don't think it is a bottomless pit for sure.
No, I don't. Yeah, I mean, it would take a lot for the market to actually go into a free fall zone from here.
It just looks so.
But 8% in a month is, I mean, we have a week to go. This is the week for expiry. It's quite a bit.
Yeah, that's quite a bit too. Amisha, just before we thank you, you mentioned that the earnings picture is still being dissected by your team. You'll probably get a detailed report soon. But I did hear you say that you believe that the earnings growth is now hampered for the next 4 quarters. Now, based on that, what would be the fair index value for you guys at Prabhudas Lilladher come March 2017, March 2018?
March 2018. That's what we are still in the process, and I don't think anybody will get a good handle before 1 or 2 months numbers come out. But looking at the bifurcation of Nifty weightages in terms of sectors like oil and gas, or sectors like pharma, IT, which are more immune to the demonetization but more linked to some of the other things, and factoring in little degrowth now and then a very gradual recovery in the next year for other sectors, my guess is that we will be closer to 7,500, 600, and in terms of even valuation, we will be at a fairly good, attractive valuation, looking at the interest rate outlook, looking at the kind of bond yields which are there, and what equity multiple that we can give. So I think that we are not very far off from the where we can fundamentally justify something.
Okay, that's heartening to hear. Thanks very much, Amisha, for joining us and giving us your perspective on the markets. Really appreciate your time and your insights as always. All right,
Thank
let's
you.